Hello traders, it's Nikos here and good evening. In this small video here I want to explain the difference between an easy and a tricky day trading setup. It's not only about the setup, it's also about where to look for those setups. Okay, for instance, I will choose for this example, let's try GBP US dollar cable, and if we look at the weekly chart, just doing our top-down approach, easy to spot, we have a very strong uptrend. The price is reaching 1.60, a round number, also strong resistance. If you zoom out, you will see that the price bounced in this area many times before on this chart since 2010 and even earlier in 2009. So we have a lot of resistance up here. The price already moved up 1,200 points. It's also touching the 200 EMA, and if we connect our previous highs, we also find a lot of resistance on this powerful weekly resistance trend line. So horizontal resistance, trend line resistance, the 200 EMA, everything is telling us kind of that it could be that we see something like a bounce here very soon. It's not just by the pip, of course 160 is a round number, but the price could break this area a little bit and later on bounce. All in all, we know that this whole area is major resistance. So most traders will say, okay, let's start looking for shorts. It makes sense, yes, but the most important part is always the power of the main trend, and support and resistance lines will break at some point. That is just how it is. So what we need to do when we see something like that, we switch to the next lower time frames and we see the price is getting close to this area. We still have a couple of pips there, of course, but it's getting close. Also, if you do your analysis, you have a lot of support, you have 1, 2, 3 setups, and it looks like the price will retrace at some point when it finds these round numbers back to support. That means we can look for short trades after confirmation, according always to the system rules, of course. But that is all great. Right now price is the boss, because price is telling us what's really going on. That is the only indicator that is telling us the truth. And if we see green candles and the price is pushing up, we can only still look for long trades. That's it. Now on the 4-hourly chart, what we had before was a retracement back to the 12 EMA only, not to the 36, and that indicates a lot of volatility. Of course we won't go for 4-hourly setup because resistance is too close and we cannot cover with our stop. We can't cover first and second lots and everything, but what we can do is combine this 4-hourly chart with our 5-minute chart to look for day trade entry. We have the filter, we have the 1, 2, 3, and in this area, if we measure from here to resistance, about 100 pips, 90 pips here. So it's worth trying out. It's still a powerful trend. Of course it's late, the price already moved up 1,200 pips, but the direction is still long, higher highs, higher lows. You can only trade longs for now. There's nothing else telling you on the chart that the price wants to go down, right? It's just up and up and up. So here it's an easy decision. You have a 1, 2, 3. The price was ranging in this area, it breaks out, and then you switch to your 5-minute chart. And on the 5-minute chart, according to the rules, always you see, let me zoom in a little bit. Oh no, I don't have to zoom in. All our EMAs are down here. This line is your 2 to 3 line break. coming from the 4-hourly chart. The price moves up, you get your crossovers, it comes back to the 36 EMA. That's what we are looking ideally. It's not a steep 1 to 3, it's a very smooth one. So a 2 to 3 line break appears. In this case it's a little bit high, the break, but remember it's only 7-8 pips. It's a very small smooth move, so that is okay. And then according to the day trading entry rules, we have an entry here, our stop below 0.3. In this case the 200 is close by, so you can put it below. And then again, according to the rules, you take your first and second lot and leave the last lot open and manage it according to again the exit rules for the third lot, right? It's really not difficult, and you see the price moved up already 60 pips. You know your targets. It is for now the 1.60 area, and it's a win-win situation anyway because you took out 2 lots. So this is a classic 4-hourly 5-minute combination where the price only retraces to the 12 EMA on the 4-hourly chart, but actually on the 1-hourly it retraced back to the 36. So that is okay. You can use the 4-hourly 1 to 3 retracement back to the 12, no problem, if you check for an entry later on the 5-minute chart. So that was an example for an easy setup, still at a point where we have a lot of resistance, so a late entry but still easy to spot. Okay, now another example, I don't have to cover the rules anymore, I did it with this first example, but you know what to do. On the daily chart, again, we have a lot of resistance. Up here we had a lot of resistance, price moved down, it's reaching an area of major support, also touching the 200 EMA, price moved down 280 pips, and we could say, okay, looking for shorts down here is not that smart because we expect the retracements. Of course we do, but if the candles are red and the lower time frames agree, until you get a confirmation, you can only look for shorts even if it's late. You switch to the 4-hourly chart, and on the 4-hourly chart you see you still have lower highs, lower lows, and I will use this latest example. The price reached already support, major support. We have more support coming from the daily chart down here. You know it's not far away, only about 50 pips. So on the 4-hourly chart, going short after a big move like this is not really smart. So what do? We combine it again with a lower time frame. And if you check the entry with a lower time frame, I have to go back and find it. There we go. You see again, price moves down. We have a crossover. Okay. You have a 2 to 3 line break, price moves lower, it also breaks the 206.33 according to the rules, and there is a setup. This is not easy to spot, that easy, because you have your 1 2 3 over the 206.33, but the break of the 2 to 3 line below, so not easy to spot. Again, it's a little bit tricky. You get a second one afterwards, same story. Here we go. It is much better. It's just not a classic nice 1 2 3. You have your entry according to the day trading rules. You also have your stop in place, plus spread, of course, never less than 10 pips. And later on, if you missed it or it didn't look good on the chart for you, maybe you didn't recognize it, you get another chance here, and a really good chance, which is easy and visible on the chart, would be this setup. You see 0.1 to 3.3 is at the same level where 0.1 is, which is still okay. Remember, you have the 200 here and the 633, so the price is bouncing again up here, And that's a great thing, because that's what you're looking for anyway, right? You want the price to be below these powerful EMAs. You also had your filter on the higher time frame, the 4-hourly chart. You know where your major support is. You have another entry. The price created a lower low on the chart, telling you that it probably wants to move lower. Resistance is there. Then you measure, okay, 12 pips stop. Price moves down quickly, 39 pips. That means 2 parts of your trade out. You create your win-win situation, and then you can just manage the remaining lot according to the rules and according to what you know. And if the price later on decides to go up again, it's okay with you. You can manage your trade according to the rules, and it's a win-win situation. You take a couple of pips still with a remaining lot, and there we go. You see, that was a combination of a easy day trading setup and also some more tricky setups that are not that clear, especially if you don't have much experience doing this. Now there's another example on the Euro New Zealand dollar. Again, daily charts, support, a lot of resistance. Price is getting close to major support, but still red candles. There's volatility still to the downside, and no reason for us to look for longs until we see it clearly. Now on the 4-hourly chart, only retracements to the 12 EMA, but on the 1-hourly chart you'll get your retracements to the 36 EMA. Price is hitting major support, retracement back to the 36, and we have a clear break. You know that support is close, and you would not take a short using just the 1-hourly chart. Again, look for a combination, and this is a very good example here we have. Let me show you. We covered that today in the live room as well. Here is your support line, but what do you see here? Price is moving down, up, and it's always crossing the 200 EMA, the white line. You have crossovers of the 12 and the 36 at the same level, and that is telling us that the price is ranging. Yeah, you have also touches here. This creates kind of a wedge on the lower time frame, and you have also a bottom formation down here. That means the price is not moving lower, but it still creates lower highs on the chart. Then it breaks your 1-hourly 1, 2, 3, which is your support line here. The price then moves lower. It creates a lower high, much lower than these previous touches. It comes back, and what it does here, and that's why this is a tricky setup, it kind of moved above the 200 EMA, but it stops immediately on your already existing resistance line. So if you extend the line like this, and you see the price stops there immediately, afterwards the first big green candle breaking your 2 to 3 line, okay, and then you get immediately an entry according to the day trading rules. You know that support is there, so you measure and say, okay, it's a 15 pip stop or a little bit less. Is it worth it? Support is 30 pips away. It's covering the first and second lot, and you can see the price move down about 36 pips before it came back. So intraday traders taking out the first and second lot at least, and because you know you have major support here, if the price reacts too quick, you can manage it over the 36, of course, or you just manage it according to the classic rules. In this case, you just have to manage the last third of this trade, but it doesn't matter. It's a win-win situation. Again, you see this is not that easy to spot. Again, support, a lot of resistance, but the price in the end fails to move higher, breaks immediately, so you can ignore this little crossover to the upside here. Okay, I hope this video was helpful. I'll see you tomorrow in the live trading room. Have a wonderful day.